QYLD, RYLD, XYLD. Yes, these are very popular investments, but I want to offer up a big warning to you. Now, before I go any further, I do own QYLD. It's a very small portion of my portfolio, but I do own it, and I bring that up because I want you to know I'm not trying to imply that these are terrible. I'm not trying to imply that you're an idiot for putting any money into these. Nothing like that, because I have myself. However, I've gathered the kind of impression that some people are putting way too much hope, way too much bullishness into these investments, because I don't think people quite understand how they're actually working. And again, I'm not here to say that they're worthless, but I am here to say be careful that you're not putting too much faith and too much kind of, wow, I got it all figured out. These are perfect. These are some sort of holy grail, because they're not. And the big draw to these, and what caught my eye, and I self-admit, is that dividend, right? You see all these videos on YouTube and on the internet talking about, wow, QYLD, and that's going to be the main one that I use. But the others that I mentioned still follow along the same line of thought process and logic. But you see that big dividend and you're thinking, wow. So what do I mean for big dividend? Well, QYLD, they got that 12% dividend, and that's how it made me feel. I think this is how it makes a whole lot of people feel. That is just a huge dividend. However, that's not actually the dividend. That's actually the distribution yield, which is different. The dividend is actually up there, 0.32%, as the SEC defines, because the SEC is saying, hey, QYLD, I see how you're computing all that, and yes, that's a distribution yield, but that's not actually a dividend, because this is all based around options, a covered call ETF. Now, I'm assuming you know this, so I'm not going to spend much time here, but with the covered calls, that means that the QYLD itself is depending a whole lot on the options premiums. And this is important because you have to understand that when it comes to options premiums, that's not the same as a dividend. A dividend is where a company says, hey, for every share you have, we will pay you, a certain amount. Let's just say it at $1. And no matter what happens to the stock price, you're still going to get $1 per share no matter what. Now, yes, at some point they could, manipulate that dividend amount. But my point here is what I'm trying to convey is that the dividend stays the exact same no matter what happens with the share price. But when it comes to options, that is not the case. And the relationship here is very simple. When it comes to the asset price, what you have to keep in mind is that when asset prices go down, the option premiums are also going to go down. And we have actually a very recent example of that. If you had any familiarity with Amazon options, you know those option premiums were massive, but they just recently did a stock split. The stock price came down. So in this case, the asset price came down. And now when you look at those option premiums, they are much smaller. And when it comes to just the general relationship here, if options premiums go down, well, then it will come to that distribution amount, because that's where the distribution amount is mainly coming from, are those option premiums. Well, the distribution amount is also going to go down, which means at the core that QYLD is at the mercy of the NASDAQ 100 asset price. So if asset prices go down, the options premiums are going to go down. And as those option premiums go down, the distribution is going to go down. And when you think back to that first slide, that means that percentage is also going to go down. And then when you think about just the general idea of the QYLD itself, now granted, I realize that the people that are putting money into this, they don't necessarily care about the principal, because this is an income. They are looking at that quote unquote dividend, which we now know is not actually a dividend. They're looking at the distribution yield and thinking, hey, you know what? I just want the cash flow every month because they pay it every month. And I realize that is your primary reasoning for wanting to make the investment into this ETF. But let's now consider something else, and let's look at how the actual principal would be behaving through all of this. And we look here at the price itself of the chart. And what I want you to notice here is this part right here. This green line represents COVID, right? So that was COVID. That was a big COVID crash, as we'll call it. And that's as low as the markets in QYLD got at that point. And you can see that very recently, QYLD was once again essentially right at that level. Sure, it didn't hit it exactly, but I think we can all agree it got very, very close to heading right back down to where its price was way back during that big, COVID crash, as we'll call it. But let's now look at QQQ, which is essentially what it's based on. Keep in mind that green line. The lowest QQQ got was up here. You're not seeing anything. It is not anywhere close. Not anywhere close to that green line, which QYLD hit very recently. And yes, it bounced, but it hit that. So my point here is that QYLD also is offering very little downside protection. And when you stop and think about it, and you think, wow, QYLD has already hit those COVID lows, yet QQQ hasn't come anywhere close. Hopefully you start to see how there's not a whole lot of downside protection when things get rough. Again, I understand, yeah, Clay, but QQQ does not pay nearly the dividend that QYLD does. And that's completely fair. But once again, let's be careful how you're using the term dividend and distribution. And within a grand scheme of things, that quote unquote distribution, which again, can and will come down if the asset price of the Qs continues to come down. So not only is your distribution yield going to come down, but as you just saw with those charts, your principal amount is going to continue to come down and down and down. So to really encapsulate things, I'm just saying be careful. I want to offer up a warning because on the surface, it seems like these are really, really rock solid investments. You gotta love the dividend yield, but that's not a yield. And your principal is also very much so at risk. It completely caught me off guard when I was putting this video together. And when I compared that QYLD has already essentially gone back to those COVID lows, yet QQQ, not even close. So it really goes to show how quickly that principal amount can fall apart. And yeah, you're getting those yields, but once more, those yields are very dependent on those premiums, which will come down as the asset price itself comes down. So all I'm getting at here is I get your enthusiasm. I get why a lot of people are really behind these things. In fact, I'm not going to be caught off guard at all. If I look down in the comment section, maybe I see some people, hey, hater, you're jealous. And again, I'm not because I own it. All I'm trying to get across is, you know what? Let's make sure that you're not all in. Let's make sure that you have some diversification in your portfolio because these are not as they appear and they're not as what I think a lot of people understand them to be. And I don't want to see you get all in and then have, your future plans get completely wrecked because you didn't understand how these were, actually operating as ETFs. So hopefully this helps. Let me know your thoughts down below. Maybe you have some more insights that you can throw in, to contribute to the discussion here. But like I said, I own QYLD, so it's not that I think you're an idiot for investing. I just want to make sure that you're not a little too into it. You're not, some people I think are really drunk on QYLD Kool-Aid and they think it's the greatest thing ever. They think that it's like some sort of holy grail. And yeah, it's not. So like I said, definitely don't go all in. If you have gone all in, do what you want. I'm not a financial advisor, but maybe at least just consider maybe diversifying a little bit more because you don't want to get yourself caught in a situation that you didn't, that you weren't expecting because you didn't quite understand how this all worked. But like I said, any sort of feedback, comments that you think can contribute to this discussion, definitely leave those down in the comment section. Hit that like button, check out the channel as a whole. And if you like what you see at that point, then I'd love to have you as a subscriber. But yeah, QYLD and all those other ones, be very, very careful and make sure you understand how these things are actually working. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, This becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.